What's going on, guys? This is your boy Trillionaire Mac. Welcome back to another video. So in this video, we're going to be introducing a new concept called inducement, right? So this is a question that I get quite often. I do mention it throughout my videos, and I'm sure some of you guys are wondering, like, what is that? What is inducement? I've never heard of that. Well, rest easy. Your question shall be answered by the end of this video. Now, after this video, if you still don't understand what inducement is, drop it in my DM, either on Instagram or on Telegram, okay? And we can set up a one-on-one session so I can break this concept down to you even more, all right? Don't be shy, don't be hesitant. I got you guys covered, right? But you're gonna have to let me know if you still, are having trouble with understanding what inducement is, okay? So in this schematic right here, I'm simply just drawing out lower lows and lower time, or lower highs, excuse me, downtrend expectational order flow. Okay, so as time moves on, price is going to continue making lower lows and lower highs until we get a change of expectational order flow. So let's say price breaks above this region here. We have a supply failure, as well as we have change of expectational order flow, right? Inducement would be what price creates in order, basically how price creates liquidity internally in order for certain areas to be targeted, right? So we're going to change this to demand. All right, perfect. So what do I mean by that? Okay, let's say price gives us a supply failure, change of expectational order flow, right? So basically what that means is we go from creating lower lows and lower highs, okay, to then breaking some type of substructure, okay, depending on what time frame you're on, but let's say we're on the H4, so just breaking expectational order flow and changing directions, basically. So this right here would be that break of expectational order flow that changes the direction of price, right? Inducement would be price is pushing down to this order block. Okay, well, it would probably be deeper than that. Let's say price is pushing down to this order block. It comes very, very close, and then it simply just continues to push to the upside, right? And let's say that this high right here is broken. This is inducement, okay? Now, in order to understand why that's inducement, you have to understand what is liquidity and where does it lie. Liquidity is simply just resting orders, okay? Resting orders are always going to be at the tops and the bottoms of different areas, right? And then you're gonna have something like this as well, right? So essentially, no matter how the market forms, if you have either a trend line opportunity, right, connecting two highs or even three highs, or you have a double top, or you have a double bottom, or you have, a nice V rejection, which this right here is an example of a V rejection. We push in and then push out very quickly. There are always going to be orders or money resting above and below these areas, right? Always, right? Because price has to create its own liquidity in order to move the market, right? It has to happen. So when price comes very, very close to actually touching a supply or demand zone, right? And let's say it gets close and then it rejects away without touching it, without mitigating, okay? There's always going to be inducement below a low that's above demand or above a high that's below supply, right? So it's always going to be, we'll say, demand inducement. We're going to say lows above a demand zone, and then supply inducement is always going to be highs below a supply zone. So we're going to go over both of these examples. Okay. So we know that there's money resting. Sorry about that. We know that there's money resting below this area. So what does price do? Price ends up, okay, pushing to the downside, and then eventually we sweep these lows right here. All right, we push down, we mitigate this demand, and then we see a possible entry schematic on something like the lower time frame for price to actually start to continue to push to the upside. All right, and the reason why price is able to come back to this area is simply because of the inducement that was left behind. Right? So this is an example of demand inducement or bullish inducement. Okay, it's a low that price creates, so we know that there are resting orders below that low, and it allows price to have a reason to actually return back to this demand zone. Right? Because if price has no liquidity down here, or even close to this demand zone, then there's no reason for price to actually run into the demand zone, unless what we're going to do is sweep whatever orders are resting below this area, right, and then still overall respect the demand zone and start to push back to the upside, right? That is an example of where you could possibly see price do if we don't get inducement internally, right? It can simply just reach externally and then continue pushing, right? Now, an example of supply inducement would basically be the same thing, okay? But let's say we're coming off of an uptrend, okay? So price is creating higher highs and higher lows, right? Just like so. Okay, we have a liquidity grab. Okay, so we know that there is some type of supply zone right here that is responsible for the transition of expectational order flow. Let's say price starts to make its way to the upside, it comes close, and then we start to push down, right? What normally happens is price will then use this inducement right here, the money resting above this area, to push back to the upside, right, to mitigate this supply right here, and then we'll see price start to move back to the downside, right? That is what inducement is. So now let's actually look at some live examples of inducement on the charts. So I actually did not look at the charts beforehand to actually find this inducement, so we're going to be finding it live together. One area that sticks out to me is right out the gate right here. Okay, so we see, let's just move this stuff out of the way really quickly. So, I mean, you guys can even see, right? Like right here I have, so obviously when we were in this area, right? When we were trading in this area in July 21st, or excuse me, the 29th of July, 2021, right? So we have a break of structure to the upside here. Okay, we know that that move stems from this area here. Okay, yes, price does, give a reaction right here and then, pulls back down, and then that move stems from here. That's why I was paying attention to how price reacted at this demand zone. Okay, we ended up failing the demand, completely fine, right? But we can see that price leaves this level of inducement right here, right? It doesn't quite pull into our demand zone that we have set here, right? Which was responsible. Now it comes very, very close, right? It comes extremely close. Let's change this to demand, right? And this is a live example. Like I'm literally just now hopping on the charts to find this with you guys. So when we look for a sell type of inducement, we might have to scroll back and it may take a little time, but I'm sure you guys don't mind. I don't think we have any up here. Yes, we do. Okay, perfect. Right? So in this area right here, price gives us a break of structure. Price tries to return back to this demand level. We do not mitigate this demand at all, and then price pushes to the upside and gives us another break of structure. Okay, that took place with aggression. Right? Then what happened? So we have this demand right here that was responsible for this break of structure here. Price pushes back down. We do give a failed reaction to the demand, and then we ended up failing demand. And what happened? Price ended up coming back down to our primary demand zone that has not been mitigated yet. Okay? And why does it do that? It does that because it's able to run on these lows here, or this low specifically here, right? Which is here in order to provide liquidity for price to move back into this demand zone. So this would be an example of inducement. It's basically enticing price, giving price a reason to run lower. So what I want you guys to do is on your charts, you're going to see these things start to take place above order blocks and below order blocks. So above demand zones and below supply zones. You're going to see these things start to take place. And I want you to start taking note. So if we barely tap into a demand zone and price reacts aggressively in the opposite direction, I want you to keep track of that area. And when price gets back to that area, I want you to watch how price sweeps the liquidity and then continues to push to the upside. Okay, so right here, this is an example of bullish inducement, demand inducement. Okay, now let's try to find supply inducement, which I believe we can use this example here. It's not the best example in the world. I'm actually looking to take a sell on Bitcoin as well. Probably missed entries within this wick right here, but that's completely fine. We'll go down to lower time frame and see what we can make of it in a second. And that's another thing, guys. Don't be afraid to miss trades, right? Like there are always going to be opportunities within the market, always, right? Like Bitcoin moves 24/7. So, if we do miss this trade right here, that's completely fine. Now I know overall, right, we are bullish. We transitioned from sells here to now we're looking for buys. This is now a strong low right here, which I am dropping another video probably tomorrow on the difference between strong highs, weak highs, strong lows, weak lows. So this is now a strong low here. So we'll look to see how price reacts to this area here, or possibly this area here. Okay, price to then move to the upside. Probably this area here. So probably this one is what I would look for price to trade into. So around 47,715, right? We'll look for price to give us some type of reaction here. So make sure you guys go back to the charts, back test this area, see if we actually reacted. All right, now it doesn't have to happen. Price could just fall out of the sky, but if we do get a reaction here, check my Instagram because more than likely I will be in this trade for the buy. All right, but we're getting too ahead of ourselves, so let's back up. So in this area right here, we can see that we have this supply zone here, right? That price does not mitigate on the first pullback, right? So we have a pullback here, we come very, very close, and then price continues to push to the downside. So we have a break of structure here, then we have another break of structure, and this area right here is still not mitigated yet, right? So what does price do? Price ends up pulling all the way back. Okay, we come very, very close here. We get a little bit of consolidation, and then price runs right into the supply zone. It's able to do that because we have an inducement right here, right? So this little space right here, there are orders. There are sell orders resting in this space right here, or buy orders, excuse me, because they're sell stop orders. So there are sell stop orders resting right here in this area, okay, which are basically buy orders. Sell stop orders are buy orders, and buy stop orders are sell orders, right? So anyone selling within this area was able to simply because we were able to collect the liquidity above this inducement right here, which gave price a reason to actually tap into the supply zone before continuing to the downside. And we actually did catch this trade right here. I didn't catch this trade, as you guys saw from the Bitcoin backtesting video. If you haven't seen that, you basically backtest this entire area on the lower time frame using the bar replay. Super useful, super helpful. I basically explain my thought process through this entire area. And why is that going to assist you? It's going to assist you because you can just basically adopt my thought process while you're trading to improve your efficiency and effectiveness on the charts, essentially, right? And if you're still having trouble after, all the YouTube videos that I produce, if you're still having trouble, just sign up for a one-on-one session. It's probably one or two things that's not clicking, and that's what the one-on-one sessions are for, which are free for all of my mentorship students. So if you're someone who wants to take advantage of that, right, join my mentorship program down below, right? You're going to be able to trade just like this. Everything on my chart, you're going to be able to produce. I haven't been doing this that long. And so far, I've been able to get other people to do the same exact thing, averaging 10% per week, right? That's averaging one FTMO account per week, right? You could have 4 accounts. You could connect them with the tools that we use, and you could, quadruple your profits just by trading one account and having your other accounts connected, right? It's very, very doable. So that basically breaks down inducement, what inducement is, how you can take advantage of it. Very, very straightforward. Really, really easy, guys, to be honest. And as you guys can see, this inducement was already on my chart, but this was a live example that I pulled out. We can look for some more as well, if you guys would like to. Let's see. Let's find some other levels of inducement. I want to see price react to a major level of inducement. This wasn't a bad one here, but we really didn't tap into this order block here. I mean, we don't even have to go back that far. Let's try to find one within this area here. Okay, here we go. Perfect. So I'm going to mark this up really quickly. But it's basically the same concepts over and over. So here we have some type of supply here with this pivot. Okay, we basically have a sell to buy to sell, or excuse me, we can just say really buy to sell right here, right? With this wick, then it pushes to the upside, and then price pushes up and then pushes down. So right here within this area, right, we have some type of supply. And you guys probably want proof, so I'm going to show you proof of that in just a second. So right here we have some type of supply within the market. Let's hope that we can go back far enough. I think we'll be able to, especially if we use bar replay. So let's do that. We can do a little closer. Let's do like right here maybe. And let's go to the M15. Let's see all of this. Right, so here's the supply that I'm referring to right here. All right, perfect. Oop, sorry about that, guys. So we're going to exit this out. All right, let's go back to the H4. Where is it at? Oh, okay, down here. Okay, so this is a great example of inducement. We break structure to the downside here. Okay. All right, right here. Okay, with this candlestick body closure below these lows over here. All right, we then push to the upside. We almost tap into this supply, but not quite. Right, so this is going to be our level of inducement that's going to give price a reason to return back to this supply right here. Right. Price has to have a reason to do that. So if we have liquidity resting right under the supply, then it gives price a reason to actually return back to the upside. Okay. We don't have a breakup structure here, right? So we're still just playing within this range, which is completely fine. I know some individuals are going to count this as a breakup structure because we have a wick, okay, that closes below, but on the H4, I would not count this as a breakup structure just yet. We create inducement, and then what does price do? Price trades right back into the supply, collecting that inducement first, and then tapping into the EQ of this overall supply, which would be here. Okay, absolutely perfect. And then we see price push to the downside. So that is another example of supply inducement. Okay, and we went over two examples of supply inducement, and then we went over one example of demand inducement. So that's essentially what it is. Use inducement in order to, here's another example right here. Right, we create inducement, price trades right back down, collecting whatever's below that inducement, tapping into the demand here, and then trading away. Right, it's the same thing over and over here, same thing. Right, we create inducement here for price to tap into this order block, trade back to the downside, collecting orders resting below this area, and then price pushes to the upside. It's the same exact thing over and over and over again. So now what I want you guys to do is open up your charts. Here's another example of inducement here. Like, it's really the same thing over and over, guys. Price starts to push to the downside, collects this inducement, and then what? Runs. right? So it just basically gives price a reason to return back to your demand or your supply, right? Now, I love inducement, okay? If an order block does not have inducement and it's a super clean leg, like, for example, let's say we had something like this, okay, and then like price will come down right here and then continue, right? There's no reason for price to actually return back to this area. There's no type of inducement here. So more than likely, whatever price has broken to this side, let's say we were doing something like, say we were doing something like this, right? Whatever supply was right here that's responsible for giving this reaction, more than likely price is going to trade back to this area, this demand right here, resting within this candle, and then, or range, or pivot, and then continue to push to the upside. Right? That's normally what's going to happen unless price gives you, you know, some type of inducement here for price to run into an order block. And then we'll see that, you know, inducement will be collected here and then price will trade away. Right? That's normally what happens. So definitely keep that in mind when you guys are trading. It's going to be important that you do. Hop on the charts, start to look for these inducement areas and liquidity areas for yourself. If you guys have any questions, of course, contact me. I know this was kind of a long video, but I get a ton of questions on what inducement actually is, and I wanted to make sure that I was able to break it down for you guys in a very, very simple manner, simple fashion, things like that. So with that being said, I'll catch you guys. Peace out.